I see precious metals making a move here shortly, which means that it's going to be the exact opposite for the equity markets. So the Megaphone top will hold. Markets will begin to collapse. We're going to look back at this months down the road and realize that the inflection point, the turn point for the U.S. and the world markets came in the month of September of 2016. What's set now is for a gold move vertical and an equity market collapse.
The zinc supply is facing a massive deficit. Mine closures are certainly putting a major upward pressure on the best performing metal of 2016. Right now, China has temporarily shut down 26 of its zinc mines until June of 2017. Zinc inventories are at their lowest level since 2009, and the zinc fundamentals could not be any more favorable as the world is facing a worldwide supply shock. The former president of the largest gold producer in the world just left the company to join a junior mining zinc play that is currently sitting on $9 billion of zinc and rising. Learn more about this incredible opportunity at crushthestreet.com/zinc.
Hello, everyone, and welcome into the show. I got Bo Polny of Gold2020forecast.com. I am Kenneth Amaduri. Bo has called the bottom right here on this show for gold, December 3rd, 2015, gold $1,045 to the T. And it's completely documented on our previous shows and on various places around the internet. And we've certainly seen quite the excitement this year in the gold and silver sector coming up off gold's low, and specifically in the underlying miners. Unexpectedly, I would say that we are seeing new highs in overvalued equities. I know you've talked with us about this, Bo, and we're going to expect to see some big moves in stocks and spectacular highs in gold and silver as we are going to get this full update with you today. But first of all, Bo Polny, thanks for joining me.
Ken, thank you for the ability to have another follow-up interview with you today, and great to be here. So I'm looking forward to our chat.
Absolutely. Well, you know what? I want to talk to you, start off this conversation with the correction, the pullback we are seeing in the precious metals at the moment. A week ago, actually, we saw a reckless slam down of gold. Someone selling $1.5 billion worth of gold into the markets. And really, this is the kind of stuff for me that, I can hang my hat on and say there's blatant fraud in the market, because no one who's trying to make a profit is going to recklessly sell an exorbitant amount of value of precious metals in the market in the way that it happened. And we're seeing a move down in silver as well. And you've talked about this. And I want to get your thoughts here, on what we're seeing currently with gold and silver.
So, Ken, on the introduction, we talked about how I called you up a couple weeks in advance, and I scheduled a December 3rd interview for the exact bottom. We called it on gold. And so that was at $1,045, and we scheduled that interview 2 weeks earlier. Well, what did I do a week and a half ago? I sent you an email and said, hey, Ken, let's do an interview on August 29th, which was yesterday. And then I rescheduled the interview to today, which is August 30th. Okay.
This is true. We're recording it after the close. Yeah.
Yeah, and then what I also did was a couple of weeks ago when I requested the interview with you, if you recall, what did we say about what's going to happen to silver and gold? It's going to be what? It's going to get smashed.
It's going to get smashed. Yeah, it's going to go down.
Right. That's right. So basically, gold at the time was like, I think, 1360-ish when we talked, and silver was, I think, over 20 in the 20 range. And today, the 30th of August, after close, gold at 1310 with a low at 1308, and yesterday silver put in a low at 1838. Today closing, I think, around 1857-ish. So where we're at today. So this date in time today, August 30th, is supposed to be, Ken, the same equivalent time point that you and I did the interview on December 3rd. Okay, so
the same
in
equivalent
theory,
time point. What do you what do you mean by
so
that?
pullback. Okay, so today would be a final pullback off. So we had a low come in. We had a rise in gold all the way up to just under 1,400, I think 1,370 and change. And now we had a pullback into this kind of flush smash down in August and into the end of August. So after today, the probability for lower prices is extremely small, and most likely a reversal is now imminent to the upside. Okay, and so off this reversal, the bull market's about to re-engage.
So, to say the least, it would be very surprising if we are below 1,400 by the end of the year. Would you agree with that in gold?
Well, the initial move that we're seeing initially should be just to the underside of 15, into the 1,500 range on gold. And then once 15's taken out, I still believe we're going to go to new all-time highs before year end. So gold is still on an explosive path. It's just the issue with cycles is everybody is so concerned about price. See, as a cycles analyst, I don't care that much about price. What I care about is nailing the tops and the bottoms because they're cycles. And so all I know is that from a cycle standpoint, we're out of time now to the pressure to the downside. In other words, like the wind's blowing down, it's out of time. It's no longer going to keep blowing, and it's going to reverse now. So the price is going to reverse. Now the question is, how high is it going to go? So all you can do is draw support resistance lines, and the first real resistance that I see on gold comes in just a little bit over 1,500. And so since we've got up cycles coming at us here very, very shortly, don't be surprised if 1,500 is the next target, or just over 1,500 should be the next target.
Bo, and then when it comes to silver, mathematically, just it going back to its 2011 high, there's, 2.5 times of upward potential for silver. And gold, just going back to its high, not even looking at 100%. So mathematically, silver has much more explosive potential, at least from my perspective. But remind our listeners, what you were looking at as far as your projections and what we're likely to see in silver here.
Okay, so let's talk about silver. So from prior interviews, I know we've talked about this, and I've kind of given you a little cycle strategy. But silver bottoms after gold. So silver bottoms first, gold bottoms first, my correction, silver bottom second. Okay, so if you look at December of 2015, gold bottom beginning of December, silver bottom 2 weeks later. But then silver starts to play the game of taking over the reins. Okay, and so now we're basically getting into August here into September, and so you'll notice gold pushed down sizably today, but silver held up pretty good, and it didn't push down as much. So silver's starting to take over the reins here, and it's gonna outperform gold moving forward. Okay, very, very shortly. It's starting to gain momentum, and it's very soon it'll start outperforming gold. So don't be surprised over the next few months you'll see silver far outperforming gold. And the reason is because of the ratio, as we've chatted before too, Ken, is when you have a ratio of 80 to 1, in the in-ground ratio, for every 1 ounce you mine of gold, typically you would get 10 ounces of silver, right? I think in December and January the ratio got to like over 80, and I think now we're somewhere in the 70s. I haven't checked recently. But the point is, it needs to get back up into the 10 to 1 range, but that again would be a war ratio. So we're still far away from that, but at least I think we're getting to this, we should be shortly at the 30 to 40 to 1 ratio, which means that silver should at least double the performance of gold in the near term.
Yeah. Bo, let's talk about the U.S. markets, and I know this relates heavily to precious metals because, as people fear financial assets, financialized assets, they go into real monetary assets such as gold and silver. And we've talked about this before. You called the top essentially, and it held up for the longest time back in 2015, back in the summer there, and it held up for the longest time. But we are seeing the stock markets hit new highs here, and I was hoping you'd be able to address this here in the interview. Has it surprised you seeing the U.S. equities go into all-time highs?
Great question. Here's the thing. When I do calculations, they're all based on biblical calculations. The problem is, biblically, we're living in the midst of a Jubilee year. And what that is, it's like a whole year. It's 360 days. Okay, so in the last year, for example, in 2015, we were supposed to be sitting at where we're at today with gold. But instead, we're a year later. Okay, and the reason we're a year later with gold is because of the Jubilee year, the 360-day cycle forward. So I talked about that when I did the Greg Hunter interview. It's not that gold's not going to 2,000. It's taken a year longer because of this Jubilee cycle. And so when you do the calculations, everything mathematically perfect until you realize, oh, you need to add 360 days to the calculation. So with gold, with the stock market, yes, we did call the top to, I think, within a day or two, the exact top in July of 2015 for the NASDAQ. But since the NASDAQ high has been taken out. But I don't know if you have a chance, Ken, but we did a YouTube video called Chaos 2016, and it's on YouTube. And that video is titled Chaos 2016 at our webpage or our YouTube page of Gold 2020 Forecast. So I would recommend your listeners, have a quick listen. It's only a 15-minute video. In that video, we draw what is called a Megaphone top pattern.
I did see that, yeah.
Okay, and so in the Megaphone top, you can look at any of the U.S. markets presently as of today, and you will notice that the Megaphone top and all the charts that I've drawn has not broken, which means that the high, even though it's higher, it's because it's a year later, it's still sitting at the undercusp of the Megaphone. So it hasn't broken, and it's simply just petering in at the very, very tail end of it. But we're out of time. So I see precious metals making a move here shortly, which means that it's going to be the exact opposite for the equity markets. So the Megaphone top will hold. Markets will begin to collapse. We're going to look back at this months down the road and realize that the inflection point, the turn point for the U.S. and the world markets came in in the month of September of 2016. Not one of the world markets have made a new high since. We call the exact top on China in April, May of 2015 either. So basically all world markets, all they're telling us is that there's no new high. The U.S. markets have failed to confirm and break a Megaphone pattern. So all that's set now is for a gold move vertical and an equity market collapse or massive crash. But I think when this blows up, it's going to be fast, extremely painful for people who are on the wrong side of the trade. So it's very important to be alert come September.
And we'll be looking for that, Bo. Bo, we're talking about major moves in the stock market, major moves in precious metals. The Fed made an announcement, and they alluded to needing an additional $2 to $4 trillion in QE to combat, what would be the next garden, mill recession that they are anticipating. But we're not talking about that. We're talking about, a massive collapse, not just $2 to $4 trillion dollars that would be needed. And of course, another $4 trillion would essentially double the balance sheet of the Fed, a massive move that they're alluding to for just a small recession. Bo, I want to talk to you about, what people should be preparing for in regards to, massive moves in the stock market and major upward moves in precious metals.
Well, the one thing to remember, okay, watch our videos. Again, please, take the 15 minutes, watch the videos. But basically, these are incredibly powerful long-term cycles. I took the calculation back to zero from the birth of Jesus. The point is, the biblical calculation of 8 times 252 years adds up to the year 2016 this year. So the issue is we're getting into September, which means you have September, October, November, and December. You have 4 months to go, and the calculations are clearly pointing to be an epic event, epic changes that are still to occur and begin this year, calendar year. So stock market is paper. The dollar is paper. Currencies are paper. everything is paper, okay? And the reason, the clear and the one only reason any of these asset classes clearly have value is because of belief or faith that they do, okay? Now, if something were to happen, okay, and faith is broken, understand the magnitude and the quickness of how this all could change overnight, very quickly, okay? The point is, if in gold, and especially gold and silver, they are money, okay? They've always been money. It's just that over the past hundreds of years, especially since 1970, you've been able to control the price of it through paper. But again, when the faith and confidence, when confidence is lost in paper, what will stand as the only thing that's money is gold and silver. So it's really, really important to be positioned, in physical gold and silver and holding it, outside the banking system, but basically holding it somewhere and knowing that you've got a piece or a portion or a large portion, but whatever your comfort level is. But it's important to be, it's important to have some exposure or sizable exposure to precious metals because remember, they are not paper. They are God's money. They've always been money, and they will soon prove to be pure money.
Bo, talking about the Fed here and the Fed's this lack of decision, they're kind of jawboning this last Friday, alluding to a possible rate hike, but, clearly leaving it wide open for September. When they raised rates last time, there was a massive shock to the markets. Chinese markets at the beginning of the year. We saw the U.S. stock market, a lot of volatility, and interest rates, like the 10-year bond, for instance, fell dramatically. And I guess my question to you is, what does it tell us when the Fed is trying to raise rates, but the real rates continue to fall in the bond yields?
Well, I did look at the overall bond yields and the dollar, and what it's faith and confidence that there is value in the bonds, okay? But they're the last thing. So what happens when the dollar breaks? Then the denominated assets, such as bonds, will lose value. So if the dollar drops by 20 or 30%, the asset class, such as bonds, when you go to sell them, they will be valued at 20 or 30% lower because you're you're basically buying it and getting the dollar. And so these asset classes are going to become toxic. And that's what I see happening. It doesn't matter what the Fed does. It's at an exponential time. It just mathematically, the numbers have become so exponential, eventually they're not going to work anymore.
Yeah. And as far as the severity of the situation we're looking at here, what are you telling people to prepare for? Not just financially, but where they live and how they prepare. I mean, what are you expecting, and what is your cycle work telling us about what is yet to come for people's standard of living, especially if you're in the big cities?
Great question. Before we even talk about standards of living, I think this is the most important thing to understand, is that everything in the world, the way I do my work is through their biblical calculations, which means that they prove the Bible, So if you don't believe in God, that's the first problem. So I think you need to do a little, soul searching. Number two is be positioned physically with precious metals, so you have means to transact. And then with relation to to being the location of where you're living, my suggestion, but they might want to consider to if you're living in populated cities where you see where stock market has crashed and there's chaos and there's big problems, you may not want to be residing in places of high population. That's something to definitely consider. And lastly, the most thing is you have to eat. So it doesn't hurt to have some storage. It says in the Bible, prepare.
Well, those are great words right there, Bo. What are your thoughts on the junior mining sector and how it relates to gold?
A handful of my subscribers, they love to trade the mining stocks, so I've been looking at them over the past few months, and so I got some really, we've been able to nail a lot of them, a lot of the junior miners, like the highs and the lows, because they really seem to correlate quite nicely with gold and silver. So we've had a lot of success with that, and yeah, there's a few mining stocks that we look at, and boy, they move. So I got to admit, it's been pretty exciting to see some of these positions of some of my clients really move. It's been wild. They really know when gold moves a little, they move two to three, four times what gold or silver do sometimes. So pretty impressive movements on many of the mining stocks, especially the junior miners.
Oh yeah, I mean with the 25% move in gold, we're seeing 100, 200, 300, 500% moves in some of these miners here. I want to give you an opportunity here if you have any closing thoughts that you didn't get to share or that you were hoping to share in this interview to do so, and also let people know about gold2020forecast.com.
Thanks, Ken. Yeah, really, I think this is just a critical time in our world. We've had, the bottom has already been in on gold and silver. We've had, multiple months now to prepare. We've got June, July, here now into August. We've had a great opportunity here, at some little bit lower prices on the precious metals. But all of this is about to change very, very, very soon. And I think it's important to protect your family, protect your assets, protect yourself financially, and that's it. So if you're interested in more specific time points, like in how we do our date calculations, we offer what's called a gold index, and there we provide time points into the future for gold. Have a stock index, so when we're looking to see the turn points and especially the crash here for the equity market, stock market. And that's really it, Ken. So I wish everybody well. I wish you and your family, a great rest of the year, and God bless.
Bo Polny, thank you so much for those words, and just a lot of truth in what you said right there. And I'm going to be looking. We're going to be watching September and into the fall here for some big moves here in precious metals. And to say the least, it hasn't been short of spectacular with what we've been seeing in the precious metal sector so far. And if we do see some big moves with gold and silver here and then the stock market, that'll be even more leveraged upside in the miners. So, Bo Polny, thanks for joining me.
Thank you so much, Ken. I wish you all the best.